It's time for the Property Podcast, where every week tens of thousands of property investors, new and experienced, join together to get news, knowledge and laughs at our expense. With me, Rob Bence.
And me, Rob Dix. Join us every Thursday morning for your weekly dose of property ideas and motivation. Then head over to our website at thepropertypodcast.com to keep the conversation going. Now though, let's get started.
Hello everyone and welcome to the Property Podcast. We're back with episode 134. A really good episode coming up. But first of all, let me introduce my charming co-host, Mr. Rob Dix. Oh, and I'm Mr. Rob Bence, in case you forgot.
Good morning, Rob. Yep, should be a really good episode. We're calling it Never Sell a Property. I think that's how we're saying it. It's on the page. But yeah, when we came up with this episode title, I thought it was going to be one of our kind of periodic face-off episodes where we'd each take a different side. But we've both kind of changed our view on this one a little bit. We'll be explaining that later. All of that, plus news, plus resources, of course. But first, I'm recording this from up in Manchester today because I was at our Property Hub meetups. I know you were at a meetup as well, Rob. I had a really good time. How about you?
Yeah, it was really good. We were at the London North meetup. A small group, but that's probably because there's two meetups in London. I'm sure there'll be more people there next time. But actually, what was really nice is for those who've been to the meetups before, especially in the London North venue, you know, there's normally like 50, 60, 70, 80, 90. We've even had 100 people at those meetups. It was nice just to have a chat, sit round and talk property and get really into a lot of detail, which small groups allowed us to do. I know you had a fair few turn up in Manchester though, Rob. Yeah,
we did. And it was a really nice mix as well. Mark Morris, the leader, did a phenomenal job. A really good mix of people who are podcast listeners and people who Mark had brought in from elsewhere. And there was a lot of different experience in there. So we had people who were just starting out, people who were very experienced landlords, but just all super friendly, very relaxed. It was just a really fun evening. So if you didn't get along to a meetup in October, don't worry. We're having them in November. We're having them on the first Thursday of every month. And the bookings for next month are already open. So just go to thepropertyhub.net/meetups and you can book your place there completely free. You just need to register in advance. And so I think we're going to see these going from strength to strength. I haven't had the reports in from the rest of the country yet, but based on the ones we went to, it seems like everyone's internalized what we were talking about on last week's episode about networking, doing it the right way, being friendly, being helpful, because it's really a lot of fun.
Yeah, it was a great night. And I look forward to going to a different one next time. That's a nice thing, Rob. We can go to all different venues now, each and every month, and meet new people across the country. So we're really looking forward to... I'll probably make a bit more effort next time, with London North being a 5-minute walk from my office when I finish work. Rob, you were very committed and got on the train and went to Manchester. So I'll definitely be venturing out next time. And then next time you can probably go a little bit more local.
Yep, I think I might do. And the other thing that's been going on this week is I should just say a quick thank you to everyone who took up the magazine offer. So we said how the first 50 people who subscribed to the magazine would get issues 1 and 2 for free. They went in absolutely no time. So well done to everyone who got in on time. They will be going out to you very shortly if you haven't received them already. And even if you missed that offer, if you want to subscribe in time for issue 3, which is going to be a good one, we've just finished putting it together now, thepropertyhub.net/magazine is the place to go to sign up for that one.
Okay, so let's look at our news story of the week. And I love these type of stories, Rob, because you get different bits of data making different bits of stories every week. And what I mean by that is this week's story says, 3-bed homes in the UK see fastest rent rises in new index. And the reason why I made me chuckle is because when we haven't looked at this before, I've seen another article last week with a similar story about apartments rising fastest. So it just depends on what data and what region you're looking at. But I think it's always interesting anyway, nevertheless, to have a look at these news stories.
Yeah, it is. And this data comes from a new index by Landbay, which is tracking rental prices around the country. It hasn't actually, the first one hasn't come out yet. This news story was just part of the kind of the pre-release publicity around it. I think later this month, the first proper index is coming out. But apparently it's the first one that breaks down rents across the UK by number of bedrooms as well. So it should be worth keeping an eye on because I feel like there's always a much better sales data than there is rental data. So hopefully this will be another useful tool to add in when we're doing some analysis. Also worth mentioning that in this it says outside of London, so one of the top rental rises was in Wrexham, which was up 11%, which is not necessarily what you'd expect. So interesting stuff in there. Worth checking out this story. If you go to the show notes, there'll be a link to that as well as everything else that we're talking about today. And the show notes this week are at thepropertyhub.net/neversell.
Let's have a look at our main topic then. As we said, never sell a property? So, should you? Well, as you've probably heard Rob and I say many times on the podcast, never sell a property, never sell a property. If you've been into the R&P office, you'll hear me and the team always going, never sell a property. However, a couple of weeks ago, we had a client in and we were having a chat when she'd been in for a strategy meeting. And actually, for the first time, probably ever, I think I ever remember saying, I actually recommended that a buy-to-let she was holding, she should consider selling. And it kind of surprised me that the words were even coming out my mouth. But the property she had was in a remote location, didn't have very much tenant demand, had low yields, and the type of property as well caused more maintenance concerns. So actually, it was a property that, as a buy-to-let, maybe should be sold. Now, I'm still getting over the shock now, Rob, but to be fair to the lady in question, she hadn't bought it as a buy-to-let. As many people start, it was an accidental landlord. But she intended to keep it as a buy-to-let. And after reviewing it, she's now considering selling that property. So that got me thinking, and then we had a chat offline about the subject. We thought, actually, you know what, this will make a really good podcast. Because actually, if you dig down, there are occasions when you might want to consider selling a property. Now, we haven't had a complete change of philosophy here. We do believe you should hold property. And for the most cases, never sell. However, there are exceptions. So we're going to look at those today. We're going to dig into the detail. So the default position, Rob, why should you never sell?
Yeah, there is a reason that we've been saying this for all this time, and they are good reasons. And so it's a case of balancing out these against what we're going to talk about coming up. So why never sell? Well, a very good one is that property always goes up over the long term. It's not going to go up in a predictable way every year. It's not going to go up every year. There are going to be slumps, but over the long term, property will go up. Ask anyone who sold a property in London in the 70s or the 80s how they feel about this. Often people who have sold properties can't help themselves kind of looking at what it's worth now and cursing themselves. So that's one reason. Why would you sell something that is ultimately going to go up in value? Another reason is that when you do sell, there'll be capital gains tax to pay. If you've got it in your own name, there are exemptions that you can use. If you've ever lived there at any point, then there are exemptions as well. But there will be tax to pay, so it's kind of a double whammy. And also, a reason for selling would be to free up funds to invest elsewhere. So if you've got a property, it's gone up since you bought it, and you want to get access to that equity, selling would be one way of doing that. But you could always refinance to release the funds instead of selling. So yes, you can't get 100% of what it's worth, but you can tap into that additional equity as long as the rental income is there to support it and expand your portfolio that way. So when you put those three things together, there seems to be a strong argument for holding. So you've got something which is going to go up over the long term. As it goes up, you can refinance to tap into the equity and you avoid paying any tax upon sale. So that's why you wouldn't sell a property. And they're the reasons that we've talked about in the past. So what's changed now? Why would you sell a property? Okay,
so let's look at those reasons, those possible scenarios that might make you consider selling a property. And the first one is the 18-year property cycle. So for those who've been listening to the podcast for a little while, you'll know that Rob and I have talked about the 18-year property cycle in some depth. We'll link to it in the show notes. So if you go to the show notes for this episode, thepropertyhub.net/neversell, we'll link to those podcasts and that information there. But essentially, the 18-year property cycle gives you a guide on when the property market should peak and then therefore actually come down in price as well. So if you understand the property cycle and you buy into it, then you could say, well, just before the property market tops out, you can then start selling some of your properties, if you wish. Some people actually do this, and Rob knows someone very well who's executed this strategy before. Liquidate the portfolio and then start again afterwards. So when the market has fallen, then start buying again, because then you're going to see really good rises over the long term again. If you do that, then obviously you've got a big cash fund to move forward when you approach it. Now, personally, I wouldn't liquidate my portfolio, and I won't liquidate my whole portfolio when we get up to the peak period of the boom, which is about 2023 to 2025. When that happens, I won't be selling all my property. But I might consider selling a dud.
Yeah, this is another reason which is less extreme than the position of basically buying with an eye on selling at the peak of the cycle. Not every purchase is great. So as you're acquiring properties, they won't all be 100% amazing. So it might be that your first ones aren't that great because you didn't know as much as you did later, or it might be that even later on, you end up buying something that should be really good, but for one reason or another, it just doesn't quite perform as you thought it would. In that situation, exactly like Rob was talking about earlier, you might be better off getting out and putting your money into a different investment where it can work harder. Because this is the thing, if you just sell a property and then don't do anything else with it, well, then you've then potentially sold something which could increase in value and give you income. But if you sell a property and use that money to buy a different property or a different asset class completely, but get invested in something which is going to give you a higher return than you would have got, then you'll be better off. So it's about making your money work as hard as it can. And I think possibly people should do this more than they do. But there's something called the sunk cost fallacy, which is where people are very resistant to cut their losses, whether they're financial losses or even just kind of losses in terms of effort or the mentality. People are far more likely to sell something that's making money than sell something that's losing money, even though it might be better to get out even at a loss. So for that reason, people are resistant to selling, but it can be the right thing to do. And tied into the cycle, there are going to be points in the cycle which are ideal for this. So say that you've got a property which isn't in the best location and it doesn't make a brilliant return. There'll be a lot of the time when you're going to struggle to sell that for any kind of price that you'd be happy with. If you're going to get rid of it, you'd need to really cut the price to tempt someone. But there will also be points at the cycle when the market is booming and pretty much anyone will buy pretty much anything. When that time comes, that's the ideal point at which to get rid of a property that's underperforming, maybe stay in cash for a couple of years if you think a crash is coming, and then get back in somewhere else. So we've got two arguments there for selling a property. One is you make it the basis of your entire strategy, and the other is you use the same logic, the property cycle, to streamline your portfolio, weed out the ones that aren't performing so well, and put the money to better use elsewhere.
Okay, so we've had two reasons, but we've got a third. And the third reason is a change in strategy or circumstances. So your objectives of where you're at in life may have changed. So where you were focused on growth before, you at a point in your life may need income now. So maybe you've reached retirement and you've got some properties that have done well, performed well through growth, but just aren't giving you the returns that you need now. But you've got a lot of equity there. Now, there are different strategies you can do. A basic one, though, would be to reinvest that money into higher yielding properties by either refinancing or selling. So you then may sell the property and then put it into higher yielding areas or strategies. So changes in life, changes in circumstance may consider you to sell a property or some of your properties. Also, tax changes. Another change that you can't really do much about. Now, this is obviously very topical of what's gone on recently. There will be some people who just go, you know what, I've had enough of this, and just sell because they don't want to deal with the effort. Because as we've discussed, and we've covered the tax changes in some detail, you can put measures in place so you're not affected as much as on paper it looked like you could have been. So there are things you can do, but some people might be, oh, you know what, I've just had enough of this. I've got to, jump through another hoop, I'm going to sell up. So that might be a reason as well. I'm not sure that's a very good reason, but for some people it's a good enough reason to sell and just get out of it. So there are changes in circumstances. There are maybe in your control and out of your control that give you the incentive to sell some property. So Rob, does that mean we should completely flip our strategies and start selling up?
Well, not necessarily. As we've said, there are reasons for, there are reasons against. It's going to be a case of which of those forces wins out in your particular situation. So why would you still not sell after going through all those very good reasons to do so? Well, one is that being more active is more risky. There is a risk that if you're relying on the property cycle, that you'll get the timing wrong. So basically, if you take the approach that Rob and I have historically taken, which is having a pretty diversified portfolio across the UK, then you're going to probably get quite average returns. So some areas will do well at some times, others will do well at other times, different property types and so on. Overall, you might get the average kind of UK return, which is not bad at all. If you look historically at the kind of growth that you get, pretty good. The average is a good place to be. You can undoubtedly beat the average if you're smart in getting in the right place at the right time, getting out of that place at the right time, and investing somewhere else. You can absolutely beat the average, but then there's a risk that you're not as clever as you think you are and you'll get the timing wrong. So it'd be pretty damaging if you sold everything when you think you're at the peak, sit there in cash waiting for the crash to come, and it never does. Or you put all your money into something else which you think is going to go up much faster, and then it doesn't. You can get it wrong. So with relation to that strategy, it's a case of deciding whether you want to take that risk or not. Also, being active does involve more time. So the great thing about property is that if you want to be hands-off, you can be. You can pass over every aspect of it to someone else and just collect the return. If you're going to be active, you'll probably get better results, but it is going to take up more of your time. So that's not going to be right for everyone. And finally, there are those transaction costs and tax. So even if on paper, the argument's there, the gains are there, don't forget to factor in the capital gains tax you have to pay, having the property empty while you're trying to sell it, the transaction costs in terms of legals and estate agents. It does all add up. Sometimes those costs will outweigh the benefits, sometimes they won't. But I think, Rob, we've talked about lots of reasons for and lots of reasons against. It's always going to be a case of weighing those up. But by kind of getting rid of this kind of never sell default, it allows you to really think about what is going to be the best thing to do in every situation. Often it's going to be not sell, but sometimes it is.
That's right. And that's the point. There is no hard and fast rule. So in the past, we have said never sell. But obviously, that comes with caveats. There are situations and circumstances that would maybe encourage you to sell and that you should seriously consider it. Or it may be a strategy move that you go for. And that's it, really. Just accepting average returns historically has been pretty good. And for me personally, I know we say average, but the returns, the average is still impressive. So that's good enough for me. But for some people, you may want to try and beat the average by timing the cycle to their advantage. And that's fine. But obviously this comes with time costs and higher risk. So if you're prepared to accept the extra time investment and the extra risk, then you may want to play the market cycles. For example, you could argue now if you've got property in London, property in the north is so undervalued that you may want to switch. I wouldn't necessarily start selling up my property, and I won't start selling up my property in the southeast. I think it's good to mix the portfolio, and I'm not going to gamble by moving it all in. What I will do, though, is balance the portfolio by continuing to buy in the north, as I'm doing now. But some people may want to sell and move the money around with the cycles. It's up to you as an individual. You can only speak for yourself. You may like the idea of trying to time the market and find that exciting. I know you're willing to take the risks and put the time in. But for many people, I think they'll accept as well the sort of nice, safe, boring position that we like, which is the average is actually pretty impressive. So we'll take the average, we'll take the predictability, maybe towards the top of the cycle, look at getting rid of a few duds. But other than that, unless circumstances really force your hand, in most cases, never sell a property.
Well, it took us up to episode 134 to even consider the prospect. So maybe if we make it to episode 250 or something, we'll come back and have an even more nuanced view on the matter. But I think it's something that we possibly should have explored a bit earlier. I'm glad we have now. And it'll be interesting to hear what other people think about this. So if you have a very different view from us, or you've just got something to add to the discussion, get over to the Property Hub and let us know what you think. Because this podcast is clearly just two people's opinion. And in the Property Hub, we've got about 6,000 people who could have an opinion. So we really would like to hear what you have to say on this topic.
So if you'd like to join in the conversation, make sure you go to thepropertyhub.net/never sell. Right, Rob, resource of the week. And it's seriously impressive this week. It's quite in-depth for this resource.
Yeah, big thank you to Adrian Cormican for this one, for putting this our way. This is a Crossrail resource. A lot of people are interested in Crossrail at the moment. It's something that we get asked about a fair bit. And this is a tool aimed at investors, which gives you a ridiculous amount of data about this whole thing. Basically, it gives you every station along the line, and for each station you can kind of see its score against all manner of different things, like how it rates in terms of buy to let, regeneration impact, rental growth forecasts, travel times, absolutely loads and loads. I feel like it's a bit geeky even for me. There's a lot of stuff here. But if you are interested in Crossrail, it's kind of a factor in your investment strategy. You're looking at investing in the Southeast. Well worth checking out, because there's absolutely masses of data in here, but it's presented in quite an accessible way.
It really is. So thank you, Adrian, friend of the podcast, for sending this through. It's a type of thing you could lose quite a bit of time in. It's not one-dimensional at all. There's so many variables, so much you can do with it. It really is hard to describe it over audio, so just make sure you go to the show notes. We'll link to it there, and you can have a play around with it yourself. It's completely free. And you know what else is free, Rob?
What's that?
Leaving a 5-star review for the podcast. And you know what? Tim and Sue have done that, so thank you, Tim and Sue. And they say, well, okay, it may not be the very first property podcast, but certainly the first one I've subscribed to. From the relaxed yet informed presenters and guests to well-researched news and useful resources. It's a quality production, and it has piqued my interest enough to get in Property Hub and all the other output that's out there. I'm usually quite cynical about this kind of stuff, but I think the passion and impartiality shines through and is infectious. Look forward to meeting you both at the London Summit next July. And obviously this is a little bit behind because we get so many reviews. We only do one a week to not bombard you. But thank you, Tim and Sue. And it was great to meet you at the summit. Thank you so much for leaving the review. We do appreciate it. And if you'd like to leave a review, as we said, it's free. And we get very happy when we read them. So go to iTunes. It's a little bit clunky, but it takes a couple of minutes and you will make our day, I can assure you.
Okay, so I think this is quite an important episode because it's to do with your overall strategy and the approach that you take to building your portfolio and maintaining your portfolio. Next week, we're tackling another very important topic in a very different way. We're talking about lettings law that you need to know. So that's the great thing about property. There's just so many different aspects to it. It's really important to have an overall strategy, but it's also really important to get the details right and not get tripped up by any mistakes. And at the moment, there's a lot going on in terms of new legislation. So it's not quite as glamorous and exciting as projecting forward and planning out all the riches that are going to be yours, but it's worth doing all the same. And so we're going to go through all of that next week.
Yeah, remember, it's lettings law you need to know, not would be nice to know. This is stuff you have to be aware of, so make sure you join us next week for that one. Thank you to everybody who joined us at the meetups last night. We enjoyed ourselves. I hope you did too if you attended, whether it was in the UK or overseas, because I know the overseas meetups happened as well. We'll definitely give you a bit more information on how it went next week, because we're at the morning after as we record this. But until next week, when we're back with another podcast, Tuesday and Thursday now, have a lovely time, have a lovely weekend. Thanks, and bye-bye.
Bye-bye.
Thanks for listening to the Property Podcast. Make sure you join our mailing list at thepropertypodcast.com.
And remember, we love 5-star reviews. Rob even loves them more than air miles.